Warren Buffett is betting big on oil. He has $12.2 billion invested in Occidental and another $30 billion invested in Chevron. Now, I know many investors think that oil stocks were the hot thing in 2022, and now the oil prices have come down, and oil companies like Occidental have made huge runs last year that people believe that ship has sailed. But first of all, we certainly know that Occidental was a Buffett investment, and not a Ted and Todd investment because of its size, and Buffett is known for being a long-term investor, unlike some other super investors like Michael Burry, who can change more than half of his portfolio in just one quarter. To quote from Buffett himself, "I never attempt to make money on the stock market. I buy on the assumption that they could close the market next day and not reopen it for 5 years." This tells me one thing, and I'm not even sure if it needs to be said. Buffett is not invested in Occidental and Chevron because he thinks the price of oil is gonna go past 120 and stay there while allowing companies to take home huge profits thanks to oil prices that are on steroids. I don't think that. So why is he buying? For this video, we will be focusing on Occidental, but most of the things I will be saying about Oxy will be applicable for Chevron as well. Now, I have a CNN article that I believe is useful, and in here it says 59% of oil executives said investor pressure to maintain capital discipline is the primary reason publicly traded oil producers are restraining growth. For years, the boom-to-bust oil industry spent lavishly to fund out all-out production growth. US oil output skyrocketed, keeping prices low, yet sustaining profits proved elusive. Hundreds of oil companies went bankrupt during multiple oil price crashes, leading investors to demand more restraint from energy CEOs. Today, oil companies are under enormous pressure from Wall Street to return cash to shareholders through dividends and buybacks, instead of investing in badly needed supply. Shareholders and lenders continue to demand a return on capital, and until it becomes unavoidably obvious that high energy prices will sustain, there will be no exploration spending. Let's take a look at Oxy's cash flows. As we can see, their trailing 12 months free cash flow is $12 billion. And let me remind you that the company's market cap is $57 billion and enterprise value is $87 billion. That means that their free cash flow yield at current prices is around 21%, which is simply absurd. Before we go any further, let's take a look back at how free cash flow is calculated. Free cash flow equals to cash from operations minus capital expenditures. CapEx refers to the funds that a company invests in its business to maintain or grow its operations, such as the purchase of fixed assets or investment in research and development. By subtracting CapEx from cash from operations, we can see how much cash the company has available for other purposes, such as paying dividends to shareholders or repurchasing shares. That means that if oil companies like Occidental are not reinvesting to increase the supply of oil, in other words, increasing their capital expenditures, that means more free cash flow for the company because you are subtracting less from cash from operations to get to the free cash flow. Now here we have a study from Deloitte. And on the right axis, we have free cash flow of oil companies, and on the left side, we have oil price with blue line and CapEx with gray line. And as you can see, even though the prices are at 2013-2014 levels, cash flows are 3 times higher. And the reasoning is investments are decoupling from oil prices and capital expenditures discipline is now a new form, as Deloitte puts it. But if there is one thing Buffett probably likes more than free cash flows, it is a management team that is putting it to work by allocating it properly and creating shareholder value. And on that note, now let's focus on Occidental and see how much cash we can expect and how they will put that cash to work. But before we do that, if you like this video so far, please leave a like and subscribe. It really means a lot, and I appreciate it. Here we have a part from Occidental's CEO Vicki Hollop's last earnings call speech, where she says that as we enter 2023, we expect that our free cash flow allocation will shift significantly towards shareholder returns. We intend to reward shareholders with a sustainable dividend supported by an active repurchase program, continued rebalancing of our enterprise value in favor of common shareholders, and a reduction in our cost of capital as the preferred equity is partially redeemed. And here is another part on oil production where she says, and that would be, and we've mentioned before that we are not going to try to grow our oil and gas production from 2022 to 2023. We are going to hold that flat. That means that Occidental is not going to flood the market with oil and eventually lower the prices. Of course, others could do that, but if you actually go around in the industry, as we have seen from CNN article, nobody really wants to do that. And it actually reminds me of Monish's explanation about Micron, Samsung and SK Hynix DRAM triopoly, where they are talking to the media about how much they are going to produce, where in reality they are speaking to each other through the media, because them deciding the amount to be produced among themselves is illegal. By the way, if you are interested in Micron, my video on it is in the cards right now. Here we have the final quote from Vicki Hollop, the CEO, and it's actually a Q&A. And the question is basically, what would it take to grow the supply And her answer is just music to my ears, and I would assume to Buffett's ears as well. She says it is mostly around creating shareholder value and doing it in a way that ensures that it is sustainable over time. So what we really want to do is make the best decisions around how to allocate capital. We don't feel like we necessarily need to grow cash flow at this point, because we have significant cash flow at almost all price ranges. We are break-even below $40. So currently, the way that we see to increase shareholder value the most and in a sure way that's sustainable and it also enables us to grow the dividend is to buy back shares in addition to enabling us to grow the dividend over time. But we do believe that at this point, we are significantly undervalued. So that is the best value decision and the best use of our capital dollars there. Now before we close, this time we have Chevron CEO in one of his recent interviews answering a question about the need for oil in a world that is moving to EVs very fast, and his answer, I believe, is incredibly important. He says only about 25% of a barrel of oil ends up in gasoline. 75% ends up in airplanes, ships, agriculture, mining, petrochemicals, a whole host of other uses where there are not easy and readily available alternatives today. So that is the big challenge for us, is how do we find ways to continue to meet the needs of those industries, lower the carbon emissions associated with that. The demand for the outputs of all these other industries continues to grow as the population grows, as the global economy grows, and as the middle class grows. So demand for oil and gas is not simply tied to cars. This is one of the great misconceptions. And actually, looking at the data, the demand for oil is still growing, even though at a very slow pace. But remember, that is growing on top of already an established demand. So, looking at the new discoveries, it is in a downward trend. Here, it says, worldwide discoveries of crude oil and natural gas have experienced a mostly downward trend since 2015, when the discovery volume reached a peak of some 20.3 billion barrels of oil equivalent. In conclusion, Warren Buffett's investment in Occidental and Chevron can be seen as a long-term bet on the stability and discipline of the oil industry. While oil prices may fluctuate in the short term, companies like Occidental and Chevron have demonstrated their ability to maintain strong cash flows and return value to shareholders through dividends and share buybacks. Additionally, their management teams have shown a commitment to allocating capital effectively and creating shareholder value. While it remains to be seen how the oil industry will evolve in the coming years, Buffett's investments suggest confidence in the ability of these companies to weather market fluctuations and continue delivering value to shareholders. If you like this video, please leave a like and subscribe. Other than that, I'll see you in the next one.